What is Forex? A question so many people ask. Someone is like, what are you looking at? What are the charts? And someone is wondering how you make money from the charts you look at. Someone didn't even call them charts, some are called graphs. Today we are speaking about Forex traders, Forex trading. Some people confuse it with crypto trading or stocks. Some people say it's futures, options, commodities, but today we are going to look at Forex trading. Forex trading, sometimes it's called CDF trading, though that's a hard term to use sometimes for someone who's just beginning to understand the whole process. So today I'll take you through. This course will teach you about Forex and will take you to the stage where you use your psychology to make money from what they call Forex. Yeah, so let's begin by understanding our process. Let's begin by understanding our process. Let me just. So, sorry about that. So, our process is simple. Our process is simple. Um, we start by learning. Sorry about that. Let me change this. We'll start by learning. Start by learning the process. Learning what is Forex. Where did Forex begin from? History of Forex. What is money? Actually, shall begin from evolution of money. How did money come to place? What were the forms of money? Then we shall look at Forex. What is Forex? And shall go on slowly by slowly. So, after learning, we remove the L and we earn. But before earning, we have to invest our time. Then later on, after acquiring the skill, we invest our capital or money. Then we are able to move to the last step where we come back and remove this L and earn money. So that's what everyone wants to hear. So the things are simple. Don't try to skip from learning to earn. It's like a baby. A baby starts by sitting, they crawl, they learn to stand, walk, then run, then do the whole process. Don't be big steps. I want to sit and run, bruh. You're going to lose. This is not for you. So let's take Forex as a business. A business is you first learn the business module. After learning the business module, you invest your capital into this business with the intention, sorry about that, Helen. So after investing your capital, you want to make profits. That's a business module. So with this process, if you follow this process, trust me, this is Forex. You'll make money out of it. People wonder, hey, sample communication. Oh, that's the first thing I did. Roadmap, getting rich through one night. One of my friends told me, okay, there's this new thing called Forex. The whole night I was watching YouTube videos, but I invested my small capital the first day, $10. I remember that day I lost that $10 the next day. It was crazy. But let's try to take the few baby steps and we shall get to our goal, right? So let's move and see what we shall be learning throughout this course. Let's move and see what we shall be learning throughout the course. Oh, what we shall learn. How do I leave this here? So, let's start with the evolution of the money. Let me look at what is Forex, Forex history, Forex in depth. Now, some terms here, like lot size, brokers, leverage, margin, equity, charting software. We shall follow these steps, and by the time we enter fundamentals, you'll be knowing all this. This will be small to you. From fundamentals, shall look at technicals. Now, this is where the problem comes. This is where I lose money. Yeah, risk management, technical. This may be hard for you right now, but trust me, this is our daily process. Technical analysis, some are fundamentalists, but sometimes we mix them up. That's the type of. Shall look at them deep in the video. Deep. That's deep. But this is our daily process. Candles, market structure. I'm not saying you should. How do I stop this? Sorry about that. Support and resistance. So I'm not saying we should jump to this direct and make money. No. Let's follow the steps and shall get there. Yep. Let's follow the steps and shall get there. So let's look at the evolution of money, guys. How do I say this? Let's look at the evolution of money. Yeah. So, guys, teach me how to do this, bro. Zoom. It's crazy. History of money. So, how did money begin? It began in barter trading, where exchanges, we shall look at them in depth. So we had the gold era, we had the exchange of metallic coins, but this is most of the gold coin, because I've never heard of a diamond coin here. So we had the paper money era, the first paper bill, we shall look at that. Then we have from paper bills, credit cards. These are credit cards, debit cards, there's so many cards here. Then we shall have electronic money. In fact, this was how, let me just erase this. Let me just erase this. So let's look at I have lost my cursor, but this is it. No, that's not it. No. Let me put it back there. Okay, let me close this and reopen it again. Now, let's look at the evolution of money. Money began by barter trade, went to the gold. These were gold coins. Then we had an era of paper bills, which is still there, but it was modernized by bringing in plastic cards. Plastic cards like credit cards, debit cards, what we had electronic money like mobile money, PayPal, Western Union, Google Pay. What else? What am I left out? The Cash App. That's electronic money. From electronic money, we had cryptocurrencies like Bitcoin, Dogecoin, Binance Coin, BNB. That's BNB, right? Litecoin, Tether, USDT. Then after cryptos, we have something new, guys, called NFTs. NFTs stands for non-fungible tokens. That's something big. It's crazy. It's going to blow up, bro. It's going to blow up. So let's look at barter trade. Let's look at barter trade, guys. So how do I remove all strings at once? How, guys? I have to get away. Of removing all this because I have to keep drawing. I'll keep drawing, guys. I'll keep drawing. So let's look at barter trade. Barter trade began all the way. It began all the way in. It began in 16,000 BC. Sorry. Began in 16,000 before Christ. This is before Christ. And it involved the exchange of goods for goods. What do I mean by this? Let's take an example of this illustration. There's person A and person B. Person A has steak of meat, and person B has fish. So if person A wants fish, he or she has to look for a person with. If person A has meat, he or she has to look for someone with fish. And this person must be willing to exchange his fish for meat. And when this happens, this is called barter trade. Barter trade has occurred, guys. Let's take an example, another illustration. Look at this woman here, she has an apple, right? This is woman B. So if this woman A wants a banana, she'll have to look for a person with a banana but also wants an apple and exchange. If they exchange, that's what we call barter trade. From barter trade, let's look at something called, sorry about that, the gold. Gold began in 700 BC, and why people started using gold is it was scarce, hard to harvest, and it's durable. Now the reason of this, people are looking for something which is a medium of exchange. This brings out to what makes it a medium of exchange, or money. Money is a medium of exchange. It should be a medium of exchange. So I should give you this and you give me this. Hence, I should either give you this or you should either give me this. That's a medium of exchange. This is money. So if I give you this money, you give me something. If you give me this money, I give you something. It's a medium of exchange. It must have a value. $1 must be equal to something. So it should be worth the same thing. So it must store a value. If I take my $1 somewhere else, will it still be valuable? That's money, guys. That's money. Let's move so fast. I don't want to waste a lot of time here. So the problems faced by gold, why gold didn't last. It was hard to transport security-wise, and currently there are over 22 million tons of gold. The US leading. The US has the biggest gold reserve in the world. Yeah, so imagine I have 1 ton. Very rich man, bro. 1 ton. Yeah, and I want to pay to someone. Guys, that's security. How am I going to transport that coin? Brings us back to this point. It was hard to transport. Then the price of gold those days fluctuated. Guys would break. You see this? This is fancy. Guys had bricks, bro. Brick, coin, different shape. So the price would always reduce. Someone would wake up and say those days gold wasn't valuable. Someone was diamond. Another thing, it was limited in supply. Brings us back to this point. There are only 22 million. What's the world population right now? It's around 8 billion people in the world. And only 22 million tons of gold have so far been gold. Next, paper bills. The first paper bill was used by the Chinese in this year to this year. Paper bills in the Indonesia. So it was adopted by Europeans in the 17th century. So they used something called IOUs, bro. Now let me explain. Temporary IOUs. So do you remember in the previous slide where I showed you gold? This gold would be taken, security-wise, it would be taken to a bank. But central banks were introduced in around this year. So I'll take my gold coin to a bank. My gold coin, precious people. So this bank would give me something called an IOU. It was like a paper written on this paper is equal to this size of gold. That's what it was written on. And the first IOU was worth, I think, $20. If I'm correct, $20. Yeah, that's too deep into history. I didn't want to go too deep because at times I say wrong, because it's on my film. So this was the first IOU. I think this image is correct. Chinese, as I said, Chinese. Yeah. So back to what I was saying. Back to what I was saying. This- Back to what I was saying. Bruv, these notifications be on block, bruv. Yeah, read if you're reading, bruv. But Erling Haaland is the man, bruv. So let's say the bank would give me something called an IOU written on blah blah. So this IOU, I would take it to someone and be like, yo, get this IOU, give me this. Get this IOU, give me this. And this person had the right of the person I've given the IOU to would come and demand for the gold. It was so safe, bro. But what made this end? This use of IOUs and blah. These banks started being shady. They would give so many people IOUs, and it reached a point the IOUs were so many. There were so many, and the banks wouldn't back up the IOUs. Imagine 20 people go and they want to withdraw their gold, and the bank is like, I only have 5. That's crazy. And if you go deep into that, you'll find out what happened. The problems just by these IOUs, they wouldn't be used in some. I wouldn't, if I stay in a state like Michigan in the US, I wouldn't go to another state like Philadelphia and use the same IOU. They'll be like, what's that, bruv? What's that? So, this gold standard, I now have jumped an era, but I'll explain it briefly. So, what happened? We have heard of World War I, and we have heard of the Great Depression. The Great Depression happened when countries, the US and the UK, wanted to print more money for the World War I. Am I correct? Let's go and make research. And if I'm not, drop your correction in the comment section below. So this was the Great Depression. So what happened is, in 1930, the government stopped redeeming cash, IOUs from people, because there's no gold to back that currency. Wow. They were like, hell, wait up, we don't have gold for all of you. So that was the Great Depression. So it led to something called the fiat currency. Fiat currency happened when the government of the US came out and was like, print more cash. I think I have a newsletter for that, but I haven't put the image here. So the government was like, let's print more cash. That's what we call fiat currency. So things happened. Other countries, okay, let me summarize what happened. By then, only the US had a currency that was backed by gold. So all this cash they were stopping, they claimed it was all backed by gold. You get it? That's where this whole thing comes from, the gold standard. Some are currency backed by gold. But it wasn't only in the US. Other countries like China had this same system. But since, I'm summarizing, since the US had the most gold, there was a meeting of 44 states, countries in Woods in the US, in a place called Woods in the US. And they all decided that Since the US had more gold, all their currencies will be backed by the US and the US will be backed by gold. So right now, I mean, by then, all their currencies were backed by the US dollar, by the US dollar, not the country, correction. So the US dollar was backed by the gold. So it led to the end of, in 1971, the president of the US came out and was like, guess what, you guys, we're not giving you back any gold. So it led to the end of the gold standard. Since they printed so many US dollars, they printed so many US dollars, and they were more than the gold they had. It led to the end of the gold standard in 1971. So that brings us to the end of the history of money. So let's move on to what brought us. Someone told me I was taking that time in looking at the history of money. But remember what I told you in the first and the second slide, let's not jump. It's better to know what you're doing. This is a mistake. This is supposed to be an N. Sorry about that. It's correction. In the book I'll write, I'll correct it. So it's an N. So what is Forex? That's the question that brings us here. Forex is basically the buying and selling of two currencies. There have to be two currencies. For example, this illustration. This is one currency and this is the other. The exchange of the two. If I have this and I give it to you, and you give it back to me, give me another one, that's an exchange. So that's Forex. It's the buying and selling of two currencies. So due to an emerging need to exchange, a term called Forex exchange was introduced, guys. Nice history. I go to an airport, I have a yen, but I want a dollar. What's that? Forex exchange. Nice one. It came about in 1970 after the end of the gold standard. Now this is how it was caused. Yeah? Remember what I told you when the president was like, you guys, we're not giving you back your gold because we released too much cash. So everyone held this, all these countries held their money. And that's why we see nowadays we have something called central banks. You get? Yeah, so since people are traveling, there's need to exchange. If I'm going to the US and I'm from China, I can't go and use my yen in the US. I'll need dollars. So it brought about the term called Forex exchange because many countries would fluctuate among with other countries. You get? If I have $1 and I go to maybe say the UK, that is around 1.4000 maybe by then. So when you exchange that, I get some pounds, I give you my dollars. So this is why we use two currencies in Forex. So another fact, these are facts. Let's go to the facts. Right now, the Forex market is the biggest financial market. It is 20 times bigger than the New York Stock Exchange volume. So I'm supposed to give you guys a nice chart here that shows the different markets in the world. And the NYSE is the most respected, something like that. It's the most recognized stock exchange in the world, but I'm telling you guys, the Forex market is 26 times bigger than that. In a day, this thing it's kept growing. That's around $5.3 trillion turnover every day, guys. And today, imagine every day you just decide to make $100 or $1,000 from that market, or $10. Bruh. Another fact is it has no physical location, meaning I can trade on top of Mountain Everest and still make some good racks. So another fact, it operates 24/5. So let's talk about this briefly. What do I mean? From Monday to now, I'm talking because right now I'm in Uganda. I'm in Uganda, guys. So Greenwich Mean Time, it's +3. +3, that's Nairobi. Yeah, so if Monday to Friday, some banks open on Saturday, that's not considered. Since we are looking at the major, we shall go deep into that. But the Forex market is open from 24 hours for 5 days a week. A week has 7 days, but it's open 5 days a week. So it's a full-time job, bruv. Let's go on. So we're going to go into Forex depth. Let's go into Forex deeply. What is trading in the Forex market, guys? The question is money. Some other person will say currencies. Currencies, money, bruv. Ching ching. That's the sound of the Benjamin. So let me read through this. So when you buy, as an example, when you buy the Chinese yen, you are basically buying a share in the Chinese economy, guys. This is a logic I want you guys to understand. If you buy on the market, on the Forex market, shall go deep into the charts and you know what I mean. But I want you to remember this. If you go, since we said there are two currencies involved, so if I click buy, I know you already saw something like buy or sell, don't go short. If you haven't, we shall be right there, guys. So if I buy in the chart, I'm basically buying a share in the Japanese economy, and I'm betting. Forex is not betting, but I'm saying that the Chinese economy is going to do well in the next few minutes and will even be better as time goes on. And once I sell those shares back to the market, hopefully, and I say that if the market, the Chinese economy, grows better, and I sell back those shares, I make a profit. So what do I mean? I want to explain to you guys this. If I buy this, let's look at a graph, a simple graph. Yeah. Okay, this is how the Forex graph looks like. So it doesn't look like this at all. But I'll give you an example. If this is 0, actually I'm not supposed to draw this. I'm not supposed to add this part. So let's look at it again. If this is 0, the initial point, and I buy something from here, let me say $1. Let's say this is $5. It's $3. So if I buy at $1 and the thing increases in price, yeah, right? I'm still holding. Remember I bought at $1, so if I sell it back to the market when it's $5, how much would I have made? Profit, that's what I mean. That's basically what I mean. So, I would like to use this. So, in general, the exchange rate of a currency versus the economy is a reflection of the condition of the country. Yes, Forex is real life, guys. Don't be like, maybe the charts are automated. No, it's real. If tomorrow something happens to the Chinese economy, God forbid, don't arrest me for that. In real life, the Forex chart will show you what's happening. it will show you what's happening, bro. I love football, so don't mind the notifications. So let's go back to the forex chart. What is traded mostly? What currencies? Okay, what countries do we consider the most? We consider the United States. Their currency is the dollar and their symbol is USD. We consider Europe zones. They use the euro as the symbol. Japan, they use the yen, JPY. Great Britain, they use the British pound, is the initial. Switzerland, Canada, Australia, New Zealand, all use this as their currencies, and their currencies are represented by this in Forex. These are the major countries we look at. These are the major countries, I repeat, we look at. So, wow, I got away. So, let's move on to the next slide. So, okay, sorry. So, let's. So, what did I say? Each currency is identified by an ISO currency code. What do I mean? What do I mean by an ISO? You see this? You see this? These are ISO codes. That's what I mean. These are ISO codes. Yes, don't get confused. So each currency is identified by its ISO currency code. ISO stands for this: International Organization for Standardization, and code is a 3-letter alphabet, just like I showed you guys. So this international organization are in charge of all countries have an ISO code. For Uganda, guys, who are in Uganda, it's UGX, not shillings, it's UGX. So let's look at currency pairs in Forex. In Forex, we trade the above currency pairs, hence a currency pair is quoting one currency to another. That's a definition. Whereas we only use two pairs, two currencies. That's just like I said, Forex is two currencies. So the first currency, let me give you a small example. This is the pound versus the US dollar. We're exchanging the pound for the US dollar or the US dollar for the pound. So the first currency that appears inside is called the base currency. And the second is called the quote currency. Shall go deep into that, guys. Deep into that. So, what are the major currency pairs we trade? So, these currency pairs contain the US dollar on one side and are the most frequently traded. Yes, the US dollar is the most traded currency in the world. That's fact. So, the major currency pairs are made of the US. So, if we quote Euro US, so it's Euro America and Eurozones. GBP, JPY. These are in GBP US. These are in order, guys. These are the most traded currencies in the world. GBP, so this is Great Britain versus the US dollar. USD JPY, it is US and China. Japan, China, Japan. Audi US dollar, it's Australia and the dollar. New Zealand versus US dollar. It's the New Zealand dollar versus the US dollar. US dollar versus Canadian dollar. This is America, Canada. US dollar and CHF is America versus Switzerland. We shall know why America appears first on some and appears second on some. Next slide. So let's look at the major currency pairs. We looked at them. So other currencies that don't include the US dollar are called cross or minor currency pairs. They are also traded in the Forex market, from the euro and the Japanese yen, now the Canadian dollar and the Japanese yen, from the GBP, Japanese yen. Let's also look at exotic pairs. These are mostly meant of the US dollar and the currency of the emerging economy, like the US dollar, the ZAR, this is the US dollar, the South African rand, US dollar, the Mexican peso. So let me give you a brief example of what we take you back a bit. So I say when the US dollar comes second here, you get a stronger currency. Right now we know that the pound is greater than the US dollar. So the stronger currency comes first before the US dollar. That's why here you see the US dollar is stronger than the Mexican peso. That's why it came first. The US dollar is stronger than the rand. That's why it came first, guys. Even up here, the pound is stronger than the Japanese yen. That's why it came first. Let's go on.